Is a 50-year mortgage a good thing? Well, let's go over the pros and cons. So far, the biggest pitch for this has been lower monthly payments, which in turn would lower the barrier of entry into getting a mortgage, and in theory makes these payments more flexible because you have a lower monthly payment, so you can put more towards your principal on that loan. Now, that being said, we have to look at who the real winners are in these cases. And in my opinion, that's going to be the lenders and the investors. The reason I say that is because if you take a loan on a $100,000 house, let's just say you got a mortgage at 6.5% for 30 years on that $100,000 house, you're paying about $100,000 in interest over the course of that loan. Now, same example, but with a 50-year mortgage, you're paying about $220,000 in interest payments, more than twice the cost of the house in interest payment on that mortgage. And that's with a $100,000 home. Homes around here in my market in Boston range anywhere from $500,000 close to $1 million for a regular single family home. And so what that translates into is literally hundreds of thousands of dollars, potentially into the millions of interest that these lenders will now collect. Now, the other pitch for this type of loan product has been for investors, saying, well, hey, if you have a lower monthly payment, it'll be easier to make properties cash flow from the rents over time. And yes, this might be true. However, I thought the whole point of the 50-year mortgage was to open up housing affordability and make it more accessible for more people, not necessarily investors. And so that's my take on it. Obviously, good and bad things with this. But the way I look at it is who's winning in the end, and that's who I see is winning. And I don't think that that necessarily helps the common man, the regular people that are working hard just trying to afford a piece of property.